What's that? We're live now? Okay, but the vote. Are the mics hot? Going out live? Okay. Okay, great. Thanks.
Yeah.
Hey everybody, welcome to That Crypto here on a Tuesday night from that channel in downtown Toronto. It's me, Hugh, and Dennis is here, of course. We have a small but I'm trying to find the right word for it. A small audience here that's very interested in what we're going to talk about. So thank you guys for coming.
It's very valuable.
It is valuable.
Valuable. The guys are from the financial background.
Exactly, and of course they can participate in our conversation as we conduct it, or presentation, Dennis, because I know you've done a lot of work to prepare our presentation tonight.
Yes, I did. Yeah, hello everyone. I'm Dennis, as he already introduced me tonight. So if you guys have questions, just raise your hands. Comments, same thing. I would be glad to hear your inputs. I'm not an expert in traditional finance, so yeah, if you see something strong, please.
And that's what this is all about, in a sense, is that crypto is such a new phenomenon, and the traditional industries are trying to kind of wrap their heads around it. And so tonight we got a couple of people from the financial sector. So
just to understand your level, kind of. Do you know what Bitcoin is? Just raise your hand if you know. Awesome.
Everyone but Alex.
Do you have Bitcoin or any other cryptocurrency? Okay, that's fine. But you have some sort of an understanding about what blockchain, what Bitcoin, and what traditional finance is. So very recently, well, I mean, not, like in crypto, the time is like 10 times faster than in normal life. So whatever was a year ago, it was like almost like 10 years ago in normal life. So recently, maybe since last year, we hear this term, the decentralized finance, and even more often this year only, like from January. So I was trying to actually find the definition what DeFi is, like decentralized finance, and I couldn't. There's no Wikipedia article, so bear with me. I will be explaining and try.
Well, it's probably being invented as we speak, what decentralized finance really means, right?
Exactly. This is where we are right now. One note about the next Tuesday. Next Tuesday there will be a blockchain future conference, so we won't have the meetup here. I know we have tickets, and if you, this is the largest crypto conference in Canada. And if you guys want to get a 50% discount on their website, which is future19.com, 19 as numbers, future19.com, use the code CryptoBay50. Well, this is our old name of the meetup was CryptoBay, so CryptoBay50, and you'll get the 50% discount for the conference. It's a 2-day conference, August 13 and August 14. Full day, huge party.
And does that apply for people watching online as well?
To anyone.
So there you go. Just go
Anyone who can use the code will get a
CryptoBay50.
CryptoBay50.
Future19.com.
Okay, back to the decentralized finance. So in comparison to traditional finance is governed by banks and other financial institutions that control people's assets. So you don't really own anything. So there is a third party that's in control of your asset, introducing some sort of risks. Decentralized finance adds extra functionality to all those assets because it's digital, it's programmable, and reduces operational risks. So in decentralized finance, individual is the sole custodian of the assets. So no one else, there's no third party. You keep your keys. Whether it's good or bad, it's up to you to decide. If you don't want to be responsible for your wealth, then you don't have to. We have banks for that. Decentralized finance is open source, and anyone can get the developers tools that allow for new instruments to be built. So, and as you mentioned, right at this moment, the entire space is developing. So we don't really know what's going to happen tomorrow. Because of this open source nature, anyone can build whatever they can come up with. That's very interesting. You can't do this with US dollars or
And
any
just,
dollars.
yeah, but this whole idea of decentralization, I mean, that's what crypto blockchain is all about. And there's been a lot of talk about decentralization for a long time.
Yeah, but what does it mean, decentralization?
That's
Like
what we're going to find out tonight.
I mean, what benefits can you get? For example, in DeFi, no one stops you. You don't have to ask for permission to build a new financial instrument on blockchain. In traditional finance, you need to get a permission from the government.
Regulation.
Regulators.
To protect the public.
Yeah, so in DeFi, you can use traditional and newly tokenized assets. So we're not there yet, but there are a lot of talks of tokenizing real estate, pieces of art, and whatever you can imagine, companies and whatnot. So we can use traditional, whatever is this, Bitcoin money, ERC20 tokens, and all the other, and newly tokenized assets. And DeFi provides transparency of issuance, of repayments, loans, of collateral. So everything on the blockchains are public. Anyone can check online and audit what's happening. You can't really do it with traditional finance. Right now, at the moment, we see a lot of hybrid instruments between traditional finance and DeFi. So they call it Wall Street meets blockchain. So essentially, crypto assets are digital bearer instruments by nature.
Digital bearer instruments.
Instruments by nature. It's the same as cash. Cash is a bearer instrument.
So whoever has it can spend it.
Yeah, there's no name attached to that.
All right.
So same thing with Bitcoin. If I have the key, it means it's my Bitcoin. If you have the key, it means it's your Bitcoin or Ether or anything else, any other digital asset. So what is it like? There are two types of hybrid financial instruments between traditional and crypto assets. It's called a crypto wrapped around legacy assets.
Mm-hmm.
For example, we know stable coins, we know gold bars, tokenized gold bars like gold coins. It can be tokenized real estate, which I haven't seen yet, so but we've heard a lot of talk. So tokenized art. So those can be tokens that wrapped around, like underlying assets is traditional from the legacy system.
Right.
But the crypto wrapped around legacy, those types of assets are issued on the blockchain and settled on the blockchain.
Mm-hmm. Right.
The second type of asset we see the legacy wrapped around crypto assets. So these are the derivatives of Bitcoin, like ETFs, which is not approved. It's been going on for like 5 years. They're trying to approve the ETF, exchange traded funds, that don't have the underlying Bitcoin under them. They just like you're betting on the price of Bitcoin. Futures we already have for a couple of years, and other derivatives. So the underlying asset is the cryptocurrency, Bitcoin or Ether or anything else, but it's settled. It is issued and is settled on the legacy systems. Oh, so yeah, I have here a little bit of comparison between legacy assets and crypto assets, and what's the difference that we have. First of all, the settlement. In the legacy systems, the settlement is always via intermediaries, and it's delayed. Therefore, it's creating counterparty risks. Mm-hmm. It's never instant. Crypto assets, on the opposite, it's a peer-to-peer settlement. There are no intermediaries, and value is exchanged simultaneously. So we're doing the simultaneous swap. If you buy something, a token from me, you get my token from me. So I buy token from you, you get from me, and it's in one smart contract in one move. So there's no risk in this transaction. Legacy assets are debt-based, crypto assets are equity-based. This is for the...
Sorry, are they...
for the...
what? Okay, so say that again, that last line.
So legacy assets are debt-based.
Okay.
So
Always?
there's... I'm not sure about
Okay.
always, but if you think it's most of the assets are IOUs. So I give you the note that's a
Okay.
promise of delivering something. Even the banknote essentially was the IOU.
Yeah.
And then the share and
Okay. So legacy assets are debt-based.
And the crypto assets are equity-based. So
okay.
when I send you Bitcoin, I send you the real thing. I'm not sending you a promise to pay tomorrow.
Okay.
So for the legacy assets, everything is owned indirectly. So registered owner is not necessarily the true owner. Like we have custodians that store the assets for us. Like gold is stored in the vault. So you might have a certificate or even digital certificate, but the physical gold is somewhere else.
And same with cash. It's actually stored at the bank. Or money.
Well, actually, if you have cash, like paper money, it's actually the bearer instrument.
Right.
So you own it. But what's inside of your bank account is just attached. It's attached to your name, but you don't.
We're not the custodian.
Crypto assets, they represent the direct ownership. Crypto assets are in individual accounts, while legacy assets are in omnibus accounts. I don't really know what it means, but there's an explanation. Assets pooled in a fungible bulk. It doesn't really matter which dollar is your dollar and which dollar is mine dollar. In the bank, it's just number. The Bitcoin is, every Bitcoin is traceable. This is actually, that's what everyone in the development of Bitcoin is trying to work on to make Bitcoin fungible again. While legacy assets are natively analog, crypto assets are digital, that's obvious. And legacy assets are stored in multiple asynchronous ledgers, which require a reconciliation at the end of the term, the day, the quarter, or whatnot. For the crypto assets, there is one golden copy, so to say, ledger, and everything is in there. It doesn't require reconciliation. The transactions are nearly instant. You guys have any questions? Yes, can you grab the mic?
Yeah. Hello?
Is it on? Yeah, it's on.
Yeah. My first question: which coins is allowed on the DeFi? Any coins or just the Bitcoin as a major one?
Well, DeFi is an abstract idea of traditional finance on the blockchain. So right now, different companies are trying to copy the traditional financial instrument on the blockchain, and most of all on Ethereum, because the Ethereum is so-called like the virtual machine, world computer. You can program anything on Ethereum. It's a Turing complete language, so you can program whatever you want. Bitcoin is not so easy to program. So most of the DeFi instruments are on Ethereum. So Ether is the main coin, but also any other ERC20 tokens that are like coins that are issued on Ethereum, Ethereum can participate in DeFi. So this is the major platform right now. However, in general, DeFi can be on any blockchain, nothing stops you. I'm just using Bitcoin and Ethereum as they are the major cryptocurrencies. So Bitcoin is the major coin. It has like 68% of the market dominance as of today. And Ether is the largest programmable blockchain. So, but yeah, you can launch your own blockchain and build your own DeFi instruments. Yeah.
So you mentioned about legacy systems and they getting settled after a day or two, right? Primary calls and the Bitcoins are primarily peer-to-peer settlements, and that's why it's sort of the value is traded simultaneously.
Value is exchanged.
Exchanged simultaneously, right? On the other cases, say for instance for a stock, there will always be a T+2. So say another 2 days from when you will actually get that stock in your portfolio.
Yeah.
Having said that, I believe it is also related to the economies of scale. Don't you agree on that front? Because Bitcoin is still, Bitcoin in fact, or for that matter, all the coins that we have in circulation right now are very illiquid in nature right now, and not many individuals or corporations, and obviously the larger financial institutions are obviously not trading in Bitcoins, and that's why there are not large numbers of trading that's happening. On the other hand, if it's an RBC share that goes out or a TD Bank share on trading on the stock market, multiple buys and sell orders as we speak instantly, right?
Yeah.
So getting all of them settled at one go is very, very difficult. Do you think that in the long run, whenever Bitcoins actually go on and generate more economic sense, plus gain more number of transactions, it will also not be able to do it simultaneously?
Yeah, so actually this is the slides that answers your question. DeFi elevates trust between the parties, but it does not increase the performance as of now yet. And so right now there is development of the tools and instruments of like decentralized finance as we see them right now. And you're asking about scaling. Yeah, there's people work on the scaling solutions. Yeah, everyone knows that Bitcoin and most of the blockchain, they have the scaling problems, and we cannot support millions of transactions per second as of now. However, we don't have millions of users as of now. So the users won't come like tomorrow. 3 billion people, like Bitcoin is not Facebook. Facebook might be able to onboard all of its users then, and even that is kind of questionable. So the users will come gradually, and the scaling will be adjusted as the new users show up. The same story with the internet. So what was it, 30 years ago. Internet was very slow. It was dial-up. The email would take like several days to send. And then there was a scaling solution for that. And then after that, people were able to build websites, which were mostly text. And then scaling solution didn't work anymore, so it required the next scaling solution. And with every scaling solution, engineers come up with the new ideas how to use it. Okay, now we can stream videos online. Now we can do the live streaming with multiple cameras in 4K. So, and after, when everyone starts using this stuff, then we need another scaling solution, maybe 5G, who knows. So the scaling solutions, they're gradual. Yeah, as of now, traditional finance is faster, but DeFi increases the trust in the system. So there are a lot of third-party risks in traditional finance. Maybe not in the West, like West countries are more or less stable. However, if you go like outside of the West, then you'll find a lot of problems. So one of the use cases for the decentralized finance is the fundraising, for example. And when we saw it in 2017 with a lot of ICOs, which didn't really go well, but I still think it's a good way of fundraising. We just saw lots of scams, and it wasn't regulated enough, and people were not educated enough. However, if you're a company, you can raise funds from the VC, or DeFi gives you another option, just raising funds from all over the world, from whoever is believing in your project and your company. They can participate, and they can buy a piece of your company or buy a token that would be able to convert into your product or service. So and also these are the benefits, for example. So when you are raising capital like this, you're building the community of supporters, and they can bring more value than just VC. So VCs usually they bring their expertise, but you also build a lot of people, a huge community. Usually capital comes with fewer constraints when you raise on the blockchain, through selling your tokens. And tokens, usually they can be liquid right from the start. So it's good for investors that can sell their tokens at any moment when they want, so that increases liquidity. And also it allows for experimentation. So tokens can be used for a lot of different things. It can be utility tokens, it can be shares of the company, it can be shares of the rental houses, and you can get paid through the smart contracts directly. Whoever owns the token it doesn't have to be your name. You can move your tokens to wherever you want, and the dividends or the rental income would be added to the wallet where the original token. So it allows you for a lot of experimentation. And I wanted to talk about a few examples, the prominent examples, what's happening on the blockchain.
So these are examples of decentralized finance.
Of decentralized finance, yeah. And we actually had one or even two meetups about the stable coins and MakerDAO, and I think it's one of the best examples that's on the blockchain.
Well, I
So-
like the top one though. Central bank on blockchain.
Yeah,
Own
so
it.
essentially those guys, they recreated central bank on the blockchain,
Who did?
MakerDAO.
Okay.
So what you do, you can borrow a stable coin DAI that is pegged to $1. You need to put a collateral, like lock your collateral in the smart contract, which is Ether. Usually you over collateralize because the Ether is volatile, and if
So
the price
what-
drops, so
What are they using? They're using Ether as collateral?
as collateral, yeah,
Okay.
because it's built on the Ethereum blockchain. However, they're planning to introduce multi-collateral.
Oh, I see.
It can be other tokens, but they all must be on Ethereum because it is on Ethereum.
Sure.
So that, like,
But how does it work as a central bank though?
so first of all, just as from central bank, you borrow money into existence. Into
Right.
existence.
Yeah.
And the holders of the MKR tokens, Maker is a decentralized autonomous organization, so they vote on the interest rate. So if people borrow too many DAIs into existence, they vote to increase the interest rate, so it's more expensive to borrow DAIs, and people would pay it back, pay their debts back. So that's resembles the central bank on the blockchain. So there is decentralized governance that decides on the interest rate, and there are users that borrow money into existence.
Okay.
And when they put the money back and the money is burned, they can keep their collateral. Plus they have to pay the interest rate.
Okay. Interesting.
Yes, please, just use the mic. Mic.
Because you're referring to a central bank, right? Because central bank, they lend money to other banks.
Yeah.
But in this case, they lending the money to any currency holder.
Yeah, so it's not a central bank. It's just resembles, yeah, central banks lend money to banks, but here this MakerDAO smart contract lends money to anyone who wants to borrow and is able to lock their Ether in the CDP, which is collateralized debt position, or the smart contract. So as long as your Ether is locked there, you keep your DAI. And then you return your debt and you can get your collateral back. Yeah, the question?
Could you tell me something more about this MakerDAO company? I mean, where is it located? You mentioned that it's going to act as a central bank. I mean, it is acting as a current central bank for this, a loan system that is currently available. So how, I mean, people can take loans from across the globe, across locations. How does it work? Second thing is, there is a lot of volatility and fluctuation when it comes to the cryptocurrencies, the market as such. So a person who's taking money or lending has a lot of uncertainty in terms of when he returns. Though the interest rate could be fixed, but the value of the currency that he's taken could be quite volatile because of the speculative aspect. How do you think this this as an industry could mature? Because there's a lot of speculation involved.
Yeah. So remember, we are talking about the decentralized finance. So those guys, I'm sure they have an office somewhere, and most likely in the United States. However, the entire thing is on the blockchain and is governed by the decentralized autonomous organization. So people can be anywhere, they can vote from anywhere. Well, I mean, the developers are probably in the United States, but I'm not sure, and it doesn't have to matter. So the idea of the decentralized finance or any blockchain is that no one is able to stop the code or stop the transaction or censor the transaction. So when the Ethereum started, their value proposition was unstoppable code. So whatever's on the Ethereum blockchain, no one can stop it. So no government, no law enforcement agency, nothing can stop this transaction to go through. That's for about the office and what the company is. About the volatility, so quickly how it works. You put Ether as a collateral. You over-collateralize like 1.5 times, like 50%. You put $150 of Ether in collateral, you can borrow $100 of DAI. DAI is equal to $1, pegged to $1. So if the price of Ether drops, you need to add more collateral so that you can keep the ratio. Or you have to pay back your loan. If you can't do any of those, so at a certain point, it goes out on the auction. So anyone can pay your debts and take, I think it's like 12 or 13% as a reward. And whatever's left, you keep it. So you only lose like 13% because you couldn't pay the debt back. The MakerDAO launched the project in December 2017 at the peak of the crypto bull market. And it was tested by fire through 2018-19, where the Ether lost 95% of value. And the DAI remained the peg to $1. So how it works? So when you borrow DAI, you always borrow at $1. Presumably, that's one DAI, $1. If the price drops on the market to 99 cents, for example, it makes sense for you to buy DAI at 99 cents and pay your debts, because you borrow at $1, you pay at 99 cents, so you just made 1% without any risk. If the price is above $1, 1.1, you sell your whatever you borrowed at $1, you sell it at 1.1, you just made 1%. And when you are selling, you're increasing the supply, so the price, you push the price down. When you're buying, you push the price up. So this is one tool to manage the price. The second one, there are just speculators. You don't need to borrow. You can it's a stable coin. It fluctuates around $1. You can always buy at 99 cents. You sell it at above $1, 1.1, and you continue trading. It's more or less safe, low risk trading. They also have a few, well, the interest rate that they change to regulate how much people borrow, because if people borrow too much, the supply goes up, the price goes down, and the last resort, they can shut the system down if something goes wrong. If the peg is broken, they shut the system down. They convert all DAI into Ether and they redistribute everything. And if this is not enough, I don't know, if Ethereum just drops to $5 tomorrow from 300 today, what they're gonna do, they have the tool of issuing their MKR tokens. It's kind of increasing the inflation of their own tokens that they have. Right now there are, I think there are 1 million tokens, and the price around $700 per token. So they issue extra tokens, they sell it on the market. Obviously, everyone who owns the token, they lose in value. Same thing as with dollar inflation. But they raise money, they cover all the losses. It has never happened before. So, but they have this instrument to maintain the peg and make the system work. Well, my favorite project on Ethereum. So
That's your favorite?
MakerDAO, this one.
Yeah.
The stable coin. The engineering is genius. So now we have decentralized lending. It means you can borrow on the blockchain. On one hand, it's somehow it's weird, because in order for you to borrow, you need to put more collateral than you want to borrow. So it only works if you don't want to sell your collateral. So like you let's say you keep Ether, and you think that the price is gonna go up, so you borrow US dollars. So you don't need to sell your Ether at low price. You can borrow. So same thing goes for Dharma. It's a decentralized lending platform where, well, the only thing right now they work with EtherDelta, which is a stablecoin, or USDC. USDC is a fiat collateralized stablecoin, which means there is a central party that keeps dollars in the bank account, and they issue tokens on the blockchain representing those dollars. That's you remember we were talking about the hybrid tools?
Mm-hmm.
That's a crypto wrapped around traditional asset, legacy asset. So how the Dharma works, you lock your coins like ETH or DAI into a contract for 90 days. It's a fixed term, 90 days, and a fixed interest. Basically, you decide what interest you want to get, and you're waiting for someone else to accept your offer. If the offer is accepted, 90 days, you cannot touch your coins, and you get paid in full with the interest. So right now, the Ether rate is 1%, DAI is 10% annual, and the USDC is a stable coin.
What does that mean? That's what you're borrowing?
Yeah, when you borrow, this is the interest rate that you pay.
Oh, in other words, if you're borrowing Ether, you pay
You
1% interest.
annual.
If you're borrowing DAI, it's
You pay 10%.
annual. And okay.
And if you borrow USDC, you pay 8% annual. So you also need to over-collateralize at 1.5 ratio, and there is a liquidation process if the ratio drops to 1.25.
So it's just like real loans in real life. They won't lend you the money unless you don't need it.
Yeah, but in real life you can borrow without a collateral. You just need to build your trust and relationship. On the blockchain, you don't need trust.
Okay.
And it's super fast. You don't need to go through this bureaucracy process of filling out different forms and trying to use your house as a collateral.
And I like their logo.
Yeah, I don't know what it means, but another lending protocol is Compound. It's a little bit different. So you don't create the offer. It's not like Kijiji, where this is my offer for 100 DAI. I want 14% interest rate. You add your coins to the liquidity pool.
Uh-huh.
There's no term. You can add your coins for like 15 seconds for one block at least on Ethereum, or as long as you want. And as long as they're there, the interest rate is algorithmically determined by the supply and demand. But the interest paid back is distributed among all of the liquidity providers. So in Dharma, it's one-to-one relationship. You're looking for another partner that's willing to borrow your money. Here, it's just add your money to the pool, add your tokens to the pool, and everyone in the pool gets paid equally when someone borrows. So the more money is in the pool, the lower the interest rate, and the other way around. And the interest rate is dynamic. It's adjusted every block.
Based on supply and demand.
Based on supply and demand.
Okay.
So
Interesting.
also what they went even further with the decentralized finance. So when you put your tokens in the liquidity pool, you get it's called a C token because the company is called Compound. So you get the C token back. And this C token represents your share in the liquidity. So for example, so like look what's happening. We're putting Ether in the MakerDAO collateral, and then we borrow DAI, which is already a derivative from Ether. It depends on your Ether collateral. Then you can take this DAI and lock it in the liquidity pool of Compound protocol and get back the C DAI token. The CDAI token represents your share in this pool. It's like you put 100 DAI tokens inside, you get 100 CDAI tokens, plus you're earning interest on this CDAI token. However, you also can send this CDAI token to whoever you want. You can sell it if you want. So it's not, or you can use it as a collateral somewhere else. And you can use it as a liquidity pool provider on a decentralized exchange, for example. And what's beautiful about all of this is because everything is on Ethereum, it uses the same protocol, so everything is interoperable. So the same ERC20 token is used for DAI creation, for Compound, for Dharma, for different exchanges. So anything that was created before, you can use it and apply it to your own platform. That's sort of amazing.
Can you use a CryptoKitty as collateral?
Probably you can. I just don't know where, and because they're all different, they're all unique. So how are you gonna discover the price?
The market.
How much it costs?
The market.
Well, but each CryptoKitty is unique. So each CryptoKitty has a different price. So it's
Crazy,
difficult to say.
man.
And also for the decentralized finance, or for all this project, they need to have oracles. These are software or devices that actually need to get the price feed from somewhere. So it's not so trivial to get the price of a token from anywhere. Usually they're centralized exchanges or maybe decentralized exchanges. So this is not a trivial problem to solve. So yeah, from the compound, 1/10 of the interest rate goes into the reserves for the governance and for the creating the safety cushion. So in the event of liquidation, the community can repay 50% of the borrower's debt and get a 5% discount on the borrower's collateralized assets. And as of now, there are 8 different coins that you can borrow or lend on the compound platform. There's EtherDelta, USDC, 0x token, BAT, basic attention token, Augur is a prediction market token, and wrapped BTC. BTC is a Bitcoin. It's a representation of Bitcoin on the Ethereum blockchain.
It's enough to boggle the mind.
Yeah. So, and then this is an interesting project. I wasn't thinking of it as a decentralized finance first. It's a prediction market, and the first time I heard about it, and it's like the project the longest in development. They started developing Augur before Ethereum, actually. They were thinking about Bitcoin, but then Ethereum showed up, and they kind of realized that Ethereum is much better. So for 4 or 5 years it was in development. Prediction markets basically it's betting on anything, on the elections outcome, sport betting, anything you want. So for me it was like, well, it's kind of sort of gambling, which is not gambling. Decentralized, you cannot shut it down. People like gambling, so this is how it works. However, then I thought about it as the hedging mechanism. So if you are a miner and you produce Bitcoins and you need to sell them in the future, but you need to pay for your electricity right now, you can create a prediction that Bitcoin is going to be at 10,000 at that time, and I'm betting a certain amount of money. So you kind of insure yourself. If you keep Bitcoin and it goes up, you just lost your bet, but you can sell your Bitcoins that you have right now at a higher price. If the price is below 10,000, you cannot sell your Bitcoins at 10,000 that you wanted to. However, on the prediction, you won some extra premium that offsets the Bitcoin price on the Bitcoins that you have. And this is a very interesting approach to hedging your risks, financial risks. Yeah, and also they were talking about the wisdoms of the crowd, which I thought it was also interesting about. That when a lot of people participate in some sort of predictions, the crowd knows something that no one else individually knows. And the crowd can make much more accurate predictions of the future. But this is like more philosophical discussion. So another one I already mentioned is the Uniswap is an exchange. It's a completely decentralized exchange. With decentralized exchanges, there is a problem of the order matching in the books. Usually, when we talk about decentralized exchanges, EtherDelta, Bancor, IDEX, not everything is decentralized. There is a central server that matches the orders in the books. This is the difficult engineering problem to solve. However, in this particular case, Uniswap does everything on chain, and it's similar to Compound when people can provide liquidity for the different pools of tokens. When you provide liquidity, you earn the commission when your tokens are bought or sold. And the trick is you have to provide a pair, usually with like Ether, 50%, and another token, like let's say DAI. But Uniswap is completely decentralized and it can accept any ERC20 token. Whatever token you want, you can just push it into the smart contract and start selling. There's no review process, there is nothing like that.
Wow. Anybody have any questions or comments?
Yes, just use the mic, yeah.
Yeah. Do you know the value of the these coins?
Of Ether?
The USD value for
Right now it's around $250 or something like that.
550?
$250, like around this thing.
That's Ether you talking about?
Yeah. Right?
Let me just check the coin market cap. I'll give you the exact number.
I'm looking. Is there a coin
It's 225 as of right now.
Is there a coin for DeFi? It's already out, or it's just the exchange?
ETH is a native coin for Ethereum blockchain. So it's the second largest by market cap after Bitcoin, and you use Ether to pay for transaction on Ethereum blockchain, or like any sort of calculations, exchanges, sending money from one wallet to another. You have to pay transaction fees. They're only paid in Ether.
One more question.
Yeah.
We're seeing a lot of the cryptocurrencies coming up, and most of the governments today are trying to regulate this. So, just to understand, what are the legal laws, if you could throw some points on what is currently happening in the US and Canada in terms of governments, central banks, what have they done to regulate the currency as such?
Well, this is the process in development right now. So since recently, especially when the Facebook announced their own cryptocurrency, what it was a month ago, so now they have a lot of hearing in the US Congress. They were interviewing Facebook. Unfortunately, with Bitcoin, there's no one to interview. There's no CEO, there's no headquarters, there are no engineers, so you just need to pick a random guy who knows something about Bitcoin. I don't know how you figure out if they know something about Bitcoin. And actually there is a coin center. So the guy who founded the coin center, he wanted to be the outlet for the regulators to come and ask questions. So they do research in the States. But yeah, so as you maybe know, India is not very friendly to cryptocurrencies. It's almost illegal. Canada
Really?
is, yeah.
Okay.
So Canada is okay. It's much friendlier than even the United States. And the United States has a really weird legislation, like legal system, where every state can have their own laws. So there are states that are friendly to Bitcoin. There are New York State, for example, since 2012 they introduced a bit license that's so bad that New York State almost has 0 crypto-related companies. A lot of exchanges, they just don't operate in the state of New York because of that. So yeah, the regulators are actively looking at Bitcoin this year for sure. Probably trying to understand what it is, but there's no conclusion. It can go both ways. So some of the, what is this, Brett Sherwood, he was talking openly in the Congress to ban Bitcoin because it threatens the dominance of the US dollar. So some congressmen, they say like you cannot stop Bitcoin. So
Even though Bitcoin is in one sense an antidote to the mismanagement of the currency by central bankers and government people.
To follow up with this question, so you did mention that another company, CoinSquare, Coin Center, is trying to formulate a system where it's centrally monitored, and there is
they do research and provide information for the regulators. So this is what the idea of to provide the correct information about Bitcoin. Because you can't really centrally manage Bitcoin. It's decentralized, so no one controls Bitcoin.
So you did mention about Facebook launching their own cryptocurrency. So today, if you see, the comments can ask questions to Facebook, whereas you did mention that Bitcoin is a currency which nobody knows what exactly is happening. So tomorrow, when there is a regulated Bitcoin exchange or a regulated currency that is available and approved by most countries, once a corporate such as Facebook comes up, so do you believe there's going to be a downfall in the Bitcoin currency and then move transitionally to a Facebook cryptocurrency, so that people kind of, you understand where I come from, right?
The Bitcoin and Facebook coin Libra, they have very different propositions. So Bitcoin has a limited supply. It's sort of a digital gold, but it's even more scarce than gold, because you can continue mining gold forever, but you cannot continue mining Bitcoin after it's 21 million is mined. So in terms of scarcity, it's the most scarce item on the planet. The Libra coin is just a token representing the fiat money that's backed by. So in order for you, it's just another stable coin. So just fiat collateralized stable coin. So like Tether, for example, or USDC. In order for you to create USDC, you need to bring a paper or real US dollar paper or wire transfer. Then the company issuing those tokens, stable coins, they would keep your fiat in their bank account, and they create a representation on the blockchain. So the Libra is exactly the same thing. This is what they're proposing. So Libra is a representation of the fiat currency that someone is going to hold. Bitcoin has a different proposition then. So obviously, if countries start banning Bitcoin, it will lose some value. The price would drop because it would become less liquid, so there's less or like fewer places where you can sell or exchange Bitcoin, but eventually it's gonna go up. You can't ban Bitcoin anyway.
Although it might not.
Oh yeah, so the technology is experimental, and anything can happen, like even from the engineering perspective. Yeah, and the honorable mention that I wanted to talk about, the last thing today, is the stable coins. There are two types that are in existence right now. Actually, there is a third type that's theoretical. It was never implemented, but when we had this Cello CTO Marek on Friday, so he was explaining that on their blockchain they're actually implementing that algorithmic stablecoin. But anyway, so I'm not going to talk about this. So DAI already mentioned that something that's crypto-collateralized, you need to lock in your Ether and then you can borrow DAI into existence. And everything is transparent and on the blockchain. You can audit everything right now. You can see how much Ether is in the collateral, how much DAI is in existence, so everyone can see everything. But the most popular stablecoin is Tether. Tether is the oldest stablecoin. I think they started in 2014 on Bitcoin blockchain, and the idea is that Tether represents the fiat dollar, like real dollars in the bank account, and this is what they said. So we have $1 million in the bank account. Here they are. You cannot see them because it's a banking system, and we have like banking regulations and Secrecy Act, whatnot. But we create tokens on the blockchain representing those dollars at that moment, and they always equal. One Tether is $1 because we can exchange back. So you send us Tether, we will send you dollars, $1, but one Tether, $1. That's an interesting idea, and it's like the largest stable coin. There are like 3 or 4 billion tethers in existence right now. It's the most popular, most widely used stable coin. China is very big on this, on Tether. It reminds me of the gold standard and the dollar. So the dollar was a representation of the ounce of gold or a gram of gold. But then with time, they just broke the peg. They started to print more dollars, and people were still accepting them, even when they knew that the dollar doesn't have the exact peg that they promised. They were still accepting the dollars, and they were using them as the real money. And in the 1971, they completely broke the peg. They said the dollar is not exchangeable to gold anymore. But people didn't care. They continue using dollar even right now. So similar thing is happening with Tether. Tether was saying even on their website that one Tether is collateralized with $1 in our bank account, and you can audit this. And they provided the results of several audits, and the audits were satisfactory. And then at one moment they just changed the description on their website that the Tether is not collateralized by US dollars one-to-one, but by US dollars and other assets. And people were talking that the company that's created Tether, they lost $850 million, or it's frozen somewhere, or arrested, or whatnot. So everyone was openly talking that Tether doesn't have enough collateral. I don't know if it's true or if it's not true, but the thing is, the price didn't drop. So people got used to the Tether being equal to $1, and they continue trading even if there's not enough collateral. At some point they may just remove collateral, and people will be treating Tether as
Just like the US dollar.
just like the US dollar. That's I think that's an interesting observation.
Wow, lots to think about this decentralized finance.
Yeah, so you were asking about the CryptoKitties. So there, I probably could mention the open marketplaces where you can sell your kitties. So without the third party, it's just on the blockchain. You log it in a smart contract. You put a price. When someone sends the ether into the smart contract, your CryptoKitty is released to the new owner. So everything happens at once, just as we talked in the very beginning. So OpenSea, for example, is one of those. Decentraland, Rarebits. Yeah, and yeah, there are like a few other mentions of the decentralized exchanges. Like Binance is building, it's already launched decentralized exchange. Waves has a decentralized exchange. So there are different implementations of decentralized exchanges. However, Uniswap is a very interesting exchange because of how they solved the order matching in their books.
So lots to think about. Is there any more slides there, Dennis?
No, this is the last slide, and as usual, if you buy crypto, every time you create a wallet, you will be given a string of 12 to 24 words. These are very important to keep safe, because that's the only way how you can recover your crypto assets. So as in the very beginning I mentioned the difference between traditional finance and crypto finance, that you are the custodian of your assets. It means if you lose your password, you lose your assets, and this backup seed phrase is the only way you can recover your assets. On the other hand, if anyone else gets to your seed phrase, they can recover your assets and basically steal them. And because it's a bearer instrument, you cannot prove that they belong to you in the first place. And if you buy coins on exchanges, don't keep it on exchanges, because exchanges shut down. It's a centralized finance. You have to trust them. It's not a banking system because it's very new. It's not regulated. Keep your money in the bank. Banks were here for like 500 years. Crypto exchanges were around for 5 years. And no one regulates them.
Okay.
That's it. So you guys have questions, I'm happy to answer them.
And if you don't have any questions, then we'll just turn the cameras off and get to know one another.
Let me check if we have questions on YouTube.
Sure, go ahead. I'm just so lots of innovation in the space, but I'm sure there's going to be lots more innovation. In fact, maybe we gave some of you guys ideas tonight that you can innovate and make some new offerings in the decentralized finance space.
I would just like to add a couple of things. Though we did mention about the crypto coins and cryptocurrency exchanges here, I've seen a few applications like that you mentioned. One is on real estate, the tokenized assetization of real estates. I believe it's already being done in few locations. I read in an article like in Singapore, they're already into it, and US also they had one large real estate worth close to around 66 million or so what was sold on tokenization system very recently, last couple of months or so, and including arts that you mentioned, that is also that's also started off, I believe. So these are a couple of things I thought.
Well, the problem with real life assets and tokenization on the blockchain, how are you going to enforce like the ownership of the real life assets? Like okay, you own a few tokens, or like even the entire painting over there, and then you have all the tokens. So what you're gonna do? I'm holding the painting. Are you gonna? You still need the centralized enforcement agency to come here, and they need to understand that you really own all the tokens. What happens if you lose your password? What happens if you lose your backup seed phrase? You lost all your tokens. Who owns the painting right now? Is it still you or someone else? I haven't seen the viable solution for this particular. Like if you have a token representing your house, and then I stole your token. So am I the owner right now? Because I am in the possession of the token. So what if you sold the house to me and you sent me the token? Now I have the token, but you're not leaving the house. So what should I do? That's the problem. I don't even know if it can be solved on the blockchain. I don't even know if you can tokenize anything. Every time you want to tokenize real life items, you need a centralized body, which destroyed the proposition of blockchain, which is decentralized, permissionless. So if you have a centralized party, why do you need the blockchain at all? Let them keep the ledger in a centralized way.
Well, we can have AI robocops who are governed by a blockchain. That'll solve it.
We have actually a few questions on YouTube. Let me get to them quickly. We have Andrei Gulnev asking 20 questions.
That's too many questions.
Probably not.
Probably we answered most of them already.
Yeah. Are there any other major cryptocurrencies other than Bitcoin where emission is not possible anymore? Yeah, there are a lot of cryptocurrencies that they don't produce any more emissions. Most of the proof of stake cryptocurrencies, Ether doesn't have a cap on emissions, the issuance of new tokens, but they will in the future, not as of this moment.
Do we have another question here? Yeah. Go ahead.
So it is typically said that no one actually goes ahead and takes notice unless and until it is big, right? So Uber came into everyone's attention the moment it struck big. Same happened with Airbnb or with Facebook, and that's because of the size of the market that they could capture, right? So is there any sort of report or any sort of studies going on about the size of the Bitcoin market globally or in the markets that it operates in primarily? Since there is no face to the Bitcoin market per se, that's one of the deterrents, I believe. But is there one part of it which says that yes, there should be it should be like a company, like say it's $100 million company today, but the CEO projects it to be $1 billion company in the next 10 years. So similarly for Bitcoin market per se, is there sort of any vision that's being hosted by some other individuals who are sort of cryptocurrency experts?
Could you clarify? So what about the Bitcoin market? What is Bitcoin?
So what is the total size of the market? If I just put that very clearly, as in, if you, or do you actually want the Bitcoin cryptocurrencies, in fact, for that matter, do they want it to be identified as an industry per se or not? Or do they want to keep it under the wraps? Do they want to become big?
There's no they.
And who are they? Yeah.
There is no they.
That is what his question is. Where can he find a report or information on the complete universe of Bitcoin? What is its valuation? Where all this?
Yeah, because it's all right now in bits and pieces all together at different places. And if you try to synthesize all of that information, whatever you will find is some other day as we speak, possibly some other coin might be minted, right? And how do you actually go about it? At which of them, the basic concept of any sort of a cryptocurrency that you rightly mentioned is trust, right? And how do you actually go ahead and trust?
Trustlessness. No, there's no trust in Bitcoin. That's the idea of the blockchain. You don't need to trust anyone. When everything is trustless, it's cryptography and math. The Bitcoin, the proposition of Bitcoin is the sound money, which is the money that cannot be inflated by anyone And well, actually there is inflation right now. 85% of all Bitcoins are minted into existence. And in the next 100 years, the rest of 15% is going to be minted at a decreasing rate. So every 4 years, the rate of Bitcoin production is halved. So the next halving is going to be May 2020. That's all. There's no particular.
Those are big questions. Why don't we wrap this up, and then we can continue our conversations off camera and get into that stuff. Is that, Dennis? Is that good?
Let me go. Give me 5 minutes. I'll quickly answer a few questions here. What is the residency of DAI? Which country? It's a blockchain. There is no residency. It's just they decided that the DAI is pegged to US dollar. Also, it can be pegged to anything, like the weather on Mars. It doesn't matter. The principles, how it works, is the same. They're planning to launch. I think the next one's going to be Ugandan. I'm not sure what's the name of the currency, but the community for MakerDAO is large there. Cashback scenario in cryptocurrency? No, I don't know. And who pays the 0.3% fee for liquidity providers? 0.3% is the commission for an exchange fee. So when you exchange your tokens, you pay the commission, and this commission is distributed between the liquidity providers. The Tether Bank is, I think it's in Hong Kong, the last time I checked. Yeah, that's all. Yeah, thanks, Andrei. Thanks for the questions. And guys, next Tuesday we are not going to be here. So 2 weeks from now, but you are welcome to see me at and Hugh. Hugh, are you going to be at the Futures?
I haven't thought that far ahead, because it's the future blockchain conference.
Yeah, next week. Yes, thanks for coming.
Yeah, thanks, guys. Great commentaries, great participation. So we'll be back in 2 weeks here at thatchannel.com for more That Crypto. See you then.